Good day and welcome to SCO BRICS Insight, where we look at what's really going on in the world of the BRICS. Now, according to a new report, Russia's become one of the top 10 countries in terms of having a trade surplus. In general, post-Soviet Russia has consistently generated a positive trade balance, with exports consistently exceeding its imports. However, achieving such a surplus has been made despite the enormous challenges that Russia has faced from Western countries and their so-called sanctions from hell. So it's actually a genuinely noteworthy achievement. So how did Russia manage to pull off such a reversal of its fortunes, and why do the world's two largest economies, China and the United States, find themselves on opposite sides of the coin in the terms of a trade balance? In 2023, Russia became one of the top 10 countries in terms of its trade surplus. It simply means that Russia exported more in its trade than it imported, so basically it sold more than it bought. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and my website, SCOBRICSInsight.com, and further develop it. Now, you can do this by making a small donation, which is done by clicking a button at the bottom of the screen. It's the thanks button. And everybody who donates gets a personal thank you from me. Now, according to the World Bank, global exports reached 23.3 trillion last year, while imports totaled 22.9 trillion. That results in a surplus of 365 billion. Now, the BRICS and SCO member China generated the highest trade surplus of all the countries, with a stonking 594 billion. Surprisingly, Germany performed as well as it did, along with Ireland. Germany recorded a surplus of 245.3 billion, and Ireland achieved a net trade income of 178 billion. For Ireland, that's one hell of a lot of Guinness sales. Additionally, Singapore and Switzerland had surpluses of 155 billion and 131 billion respectively. They also make up the top 5. Saudi Arabia was ranked 6th with a trade surplus of 127 billion, and Russia ranked 7th on the list with its revenue of 121 billion. The top 10 was filled out by the Netherlands at 97 billion, Australia at 83 billion, and Brazil at 81 billion. In total, 43 countries worldwide recorded a trade surplus of a total of 2.5 trillion. Now, it's interesting that the number of countries with a trade deficit reached 72, resulting in a collective deficit of $2.3 trillion. The US was a clear leader in this category, importing goods from other countries to the value of $1.1 trillion more than exported. India ranked 2nd with a trade deficit of $245 billion, which is 4 times smaller than the US figure. The United Kingdom came in at 3rd with a deficit of 232 billion, France 4th with 88 billion, and Turkey 5th with 87. Now, Russia's always maintained a positive balance at the end of each year throughout the post-Soviet period, and that included during the economic crisis times of the 1990s. For example, in the challenging year of 1998, Russia experienced a trade deficit in certain months, but however, by the end of the year, the country had actually demonstrated a positive trade balance. In other words, since the end of the Soviet era, Russia's consistently generated more revenue from exports than it has spent on imports, says Natalia Mikhailova, who's a senior analyst at Freedom Finance Global. It is, however, no coincidence that Russia is among the top 10 largest exporters in the world and has a trade surplus. The principal factor in all of this is the price of oil, which is Russia's primary export commodity. In 2023, oil prices were relatively high and trading within the comfortable range for exporting countries of $75 to $80 per barrel. As a result of the Western restrictions and import substitution policies, Russia's imported less than it did in previous years. The sanctions have had an impact on both its export revenues and its import opportunities, with imports in 2022 and 2023 being particularly affected by the sanctions. The Russian banks being cut off from SWIFT made paying for imports from some countries quite difficult. So obviously imports went down dramatically until other payment systems and methods were found and actually put into place. Russia's record foreign trade surplus was actually in 2022 at 315 billion. That was facilitated by high prices for raw materials and commodities, plus the reduction in imports. In 2023, the surplus decreased to 121 billion. However, there's one potential issue that requires further consideration. Up until 2022, Russia's economic model was based on the assumption that growth would be primarily driven by revenues from raw material and commodities exports. These were either spent immediately on imports or set aside for future use in a savings account. It was initially the Stabilisation Fund and then subsequently the National Welfare Fund, which is used for developing major infrastructure products. I mean, this economic model has actually hindered Russia's ability to develop its own manufacturing industry. Now, obviously now Vladimir Putin has made it one of his government's priorities to develop the engineering and manufacturing of the sector, to increase the use of the abundant commodities to actually make things for domestic consumption as well as for exporting. Similarly, the US developed the oil for food model in the countries of the Middle East, Africa, Asia at the end of the 20th century. Unfortunately, Russia's lived for a long time based on its own model. I mean, oil and gas to the West in exchange for engineering products and consumer goods, and the Russian government didn't do a lot about it, comments Mikhailova. However, this model actually collapsed in 2022-2023, the analyst adds, when Russia no longer had access to the two Nord Stream pipelines and the Yamal-Europe pipeline. The Nord Streams was due to the largest act of industrial sabotage in history. Now, we know who did that, and if you're interested in that subject, do watch my 2 videos on that subject. Of course, then the US and the G7 countries introduced a price ceiling for Russian oil exported by sea. Consequently, Russia was compelled to redirect its oil and gas flow exports to Asia, the East and the Global South, plus pursue import substitution policies. Another consequence of Russia's foreign trade surplus is a significant reduction in the share of reserve currencies in the structure of exports and imports, with a displacement by national currencies, primarily the ruble and the yuan, according to Bill and Kaya. I mean, due to the potential for severe imbalances in trade between countries, such as the 90% export-to-import ratio that we see in Russia's trade with India, plus the lack of convertibility or even the high volatility of national currencies, can actually hinder the ability to fully utilise the export income for imports or to build liquid reserves. In this case, the yuan has become the most used currency for international settlements currently in Russia. However, there is a potential exchange rate risk here with the yuan to the dollar, and that's where most world prices are still tied to the dollar. I mean, it's quite obvious that the increase in exports was not the primary factor contributing to Russia's rise to become one of the top 10 countries with the largest trade surplus. Rather, it was the reduction in imports that played the most significant role in this achievement. I mean, Russia's exports and trade surplus grew in 23, and this was aided firstly by the weak ruble, which increased the competitiveness of Russia's raw materials and goods that it exported. Now, I believe there's a strong possibility that this import substitution continues to develop, as it's now a major government priority, then Russia will continue to move up its rating. However, all ratings are subjective, and our view is the key for Russia is to use its export revenues that it's got to develop its own high-tech industries, engineering, manufacturing, invest in the healthcare sector, petrochemicals and agriculture. I mean, these type of investments will help Russia reduce its critical dependence on many industries and sectors that currently import. I mean, it's notable that the 2 largest economies in the world, China and the United States, have imposing views on trade balances. China's trade surplus gives rise to a feeling of envy and resentment in the United States, which in turn leads to the imposition of trade wars or sanctions, which are currently going on in everything from microchips to pork and whatever. I mean, China's production facilities and capabilities allow it to produce a greater quantity of goods than its domestic market can absorb. Obviously, the excess production is exported, which helps maintain jobs, employment and taxes. And in the case of the USA, A large and well-funded domestic market has a high demand for imports, including products manufactured in third countries using American technology, like Apple phones, computers, etc. I mean, in general, this is less of an issue for developed economies as it is for developing ones. I mean, a trade deficit can be a significant challenge for developing economies. I mean, to maintain the stability of its national currency, they need to finance it by attracting foreign investment. Now, these sort of inflows of foreign investment are subject to and vulnerable to fluctuations dependent on the global economic conditions, and any changes of these economies can depend on foreign investment, can have serious problems when they dry up, like in the Asian tigers in 1997-98. I mean, for developed countries, particularly those that issue international reserve currencies like the euro or the dollar, that's less pertinent. However, for both a trade deficit carries risks for employment, since imported goods displace domestic production, as well as a risk being dependent on foreign suppliers, which become a significant factor in a number of countries in recent years. I mean, this was very apparent with energy supplies to the EU after it stopped buying large amounts of Russian hydrocarbons, and prices skyrocketed as they tried to find source and supplies from other sources. I mean, accordingly, the US is seeking to reduce its trade deficit, which was particularly pronounced during the Donald Trump presidency and will probably be again. And they encourage the repatriation of crucial production to the country, such as semiconductors, solar panels, and products for the development of renewable energy. For me, Russia's future is looking bright. It's sorted out supply and logistics problems despite the sanctions. Now there's agreements in place with Asia, the Global South and Latin America for future development. So all in all, it's looking pretty good. Anyway, thank you for watching. Please like and subscribe. If you enjoyed this video, you can help me fund the channel and the website SCOBRICSInsight.com by clicking on the thanks button at the bottom of the screen. Now do also comment. I do answer as many comments as I possibly can, and I do appreciate all the feedback that you give me. Take care, and I'll see you all again soon.